our methodology has identified with, and we have taken a second leg to the downside under the pretense that the market is in a strong correction to the downside for a second leg early on this morning. Now, if this trade doesn't continue to the downside, we'll be back out of this as soon as we get shortly above 62 and 25. However, with the smart money bias market trading call being at net neutral, although the Dow closed up yesterday, and we have a definite difference between that market and the S&P equities, and especially the futures. We believe that there is manipulation on the part of the institutional players to use the Dow as a proxy for a smokescreen to go ahead and go short the market. Very unusual circumstances across the board, and right now you are seeing the after effect of what we had laid out. 62.25 is the preferred in, and prices are right back at 62.25. If you do not hold this level, once again, people, for a second leg, we'll be out of the trade and look for another opportunity as the market may continue to trade down. A lot of room from here all the way down to 62 and 50 now. 62 and 50 mark to the market. As you can see, just up a tick. The real change is a minor up movement out of the chicken money flow here. And we're back to the 1 minute chart. So as it stands now, with the current prices trading marked to the market at 1962.50, close to mitigating the risk. However, only down 1/4 of a point from the preferred in. Good morning, Diane. Good morning, Jeff. Good morning, Ann. Our methodology had identified with this move on the way down, we have prices fairly stabilized at 62 and 75 after a secondary preferred in right here at 62 and 25. Under the pretense that prices may find another leg to the downside, and if not, the trade will be exited and wait for another opportunity. $62.75 MTM right now. And there we are looking to exit the trade if prices will trade up at that close and mitigate the risk. MFI remains clear to stay short. And CMF is up somewhat, so looks like that's going to be it for now. Yep, just in time. Just in time. So out of the trade at 62.75 in at 62.25. For those of you who have just entered into the room, we had a major sell-off here, and then a support level was found on the 15-minute chart. as identified by this price area right here. Just below that, in fact, and now we're trading at 63 and 25. 63 and 25. Price reversing to the upside on a temporary short-term correction on a give back. The next levels laid out to the downside, people, are 1960 and 6050. These levels are so close that I've chosen to write it this way so there's no confusion. 60 is in red, 6050 is in white. Below that, we have 58 and 50, next level to the downside. And we have a whole slew of levels as well. If the market should continue to sell off, we are covered. What's interesting about this move is that there is a very well organized but small movement out of the shaken money flow as compared to the size of the move out of the prices, which leaves us still with an opportunity after the dump and the pump, if we're going to use this as a measuring area here for our indicator level, to get all the way back down to. So if the market should continue to sell off today, then that means that there's plenty of room to go on this indicator before we hit any real internal resistance to the downside. MFI remains clear to be short. Temporary halting point here on the open at 63 and 25 and marginally up, people. This is an excellent move. Excellent move. Possibilities of this gap being filled in real time on a closing basis. Okay, people, our methodology has identified with here at 9:32 a.m. after market opening on 7/17/2014, a high probability trade setup to the upside in our live trading room with the inside technician. We needed to get through the 69 level and the 15-minute resistance. You're looking at a 1-minute chart. Prices are trading MTM at 69.50, 69.25. Now, this trade was taken under the pretense that prices will get through the 15-minute level and continue to move to the upside. In the event that this is a blow-off before prices turn around, we have a quick target at 70 to get out at with a profit. That's a quick 3/4 of a point. You can take that off the table. Long-term holders will be looking at the money flow indicators to continue to hold the trade. Now, right now, prices are traded down at 69.25. Again, if they hold 69 or shortly below, prices could continue to move to the upside. And if not, it will be a blow-off, and we'll get out of this trade and mitigate the risk to the smallest amount of money on the trade. And right now, that appears to be the case. MFI, excellent position. CMF back down, and there's out of the trade right there at the 69 level, and looking for a turnaround again, possibly to get right back in for the long. But right now, only down 1/4 of a point on this, in and out. 9:33 a.m. E-mini futures, near month contract, September 2014. Holding 69.25. $69. $9.34. Current configuration out of the chicken money flow. It's now back up. And with a peak established, here, peak and back down, peak and back down. Very sensitive to the most recent price activity. And our prices are falling back down. So at this point, the decision to get in was correct. The decision to get out on the very next bar was how to mitigate the risk. The key to longevity and staying in this business month after month and year after year is learning how to identify a true high probability trade setup, number one. And number two, if it doesn't go in the anticipated direction, then we have to mitigate the risk, cut it off, and wait for the follow through to get back into trade. I'm going to cut this tape and use this recording as an excellent example of strict risk control in trading in real time. Okay, traders, a continuation of the previous loop. It is now 9:37 a.m. on 7/17/2014. The continued up movement of prices has allowed us another opportunity to get back in this trade right here just a minute ago. And we're looking for the follow through this time. Money flows are strong. Prices are moving up to the anticipated target closer to 70.75 now. Now above that we do have 72 and 50 traders. 70.75 hit for a quick profit, and prices continue to move to the upside. 72, 72, and 50 right above that. As your profit at 71.50 realized right now, 71.50 after the secondary preferred end, just above the previous tape, now 69.50 getting hit. You're at 71, 70, 75, 71. Volume is very strong on the recently closed out 1 minute bar here, 14,233. Money flow is good. EMAs are good. MFI is good. Across the board. Price is stabilized here at 71. We'll get some more continued movement to the upside. Above 72.50 becomes 73 and 25. Traders at 73 and 25. $72. We're looking for 72 people. Let's be prudent. You have a target at 72. You're locked in at 71.50. After 69.50, that's 70 and 71. That's a quick 2 points. A quick 2 points. You could have picked up from here to there and get out. Now, for the longer term holders, the money flows are clear to remain long. This trade has been analyzed, executed, managed. 2 specific targets here using the NinjaTrader platform. We are a certified Ninja partner in the educational arena. And for those of you who wish to learn how to trade in real time, we have the material and the programs to get you there. Right now, prices are holding at 71.25, 71.25. The level at 71.75 on a 15-minute chart, people, has been hit. That 71.75 has been hit. Now prices are moving up again, looking to get through that point and get us even a larger target that's laid out at the 72.50 level, people. And you're there. Now you have a lot of money. You have a lot of money on the table. You can take that off at 72.50 after getting it 69. That's a whole 3 points, traders. Don't get greedy. You can take that off the table right now. MTM 72, 9:41 a.m., 7/17/2014. Accumulated volume backed up, strong. 72.50 on a target, just about there. On the high, we got it. Additional profit made, 72.50, holding now at 72. MTM. Near contract month. E-mini. September 2014, traded in real time. Jeff Killian, Chief Market Strategist for the Inside Technician, reporting out to the world today. 72.50 once again hit. Traded above, looking to get to 73 and 25 people. That's 73 and 25. $73.25. And back down to 72. 72.50, 15-minute level's been hit. Across the board. Look at the distance, people. A lot of distance on that opening bar. It's 9:43 a.m. SMI, MFI, checking money flow, clear across the board. However, with the run-up of the prices and hitting the 15-minute level, now at 72.50, one would consider booking that profit before you have a chance to give a lot back. So everybody copy that. 71.75, you were at 72. You had plenty of chance to get out at 72. 3 different shots, didn't you? Right. Okay, and a retracement. So I'm already out of this trade at 9:44. At 72, that's it for me. Long-term holders, you are good. And price is moving down, as I suspected. 71.50 people want to give back. So that's it for now. I don't need to hang around anymore whatsoever. I'm already long gone, as you know. I couldn't get filled at 69.50. There was no way. I was lucky to get 69.75. I thought I was going to get 70 right at resistance on a 1-minute chart. So we're good. So let's roll it up and then we'll cut the tape, people. We're looking at the in at 1969.75. And the out at 72.50. Excuse me. 72. It's 225 to me. times $50, every full point move. Every quarter of a point equals $12.50, so every full point move is $50. 225 times 50 brings in a net gain per contract of $112.50 US dollars times my minimum 20 contracts traded is $2,250 to me this AM. Possibilities of more upward movement? Yes. Will we make it something that has to come to us? Absolutely. So once again, more proof across the globe today, more profitable trading from us here at the Inside Technician, cutting the tape at 9/47/2014. For more information about our services and what we can offer you, just go to our website, www.theinsidetechnician.com. All the information is there. See you on the next live profitable trade.